Thanks very much to the ASX and to NABTrade for having us here today. I'm going to talk to you this morning about MyState Limited, which is probably an organisation that many people in the room haven't heard about before today. So I'm really pleased to be here to tell you a little bit about one of Australia's smallest listed banks. I'll just run through a bit of our profile, our history, a little bit about our strategy, some of our results and a summary. We've got about 15 minutes here, and like all good bankers, I've got a lot of numbers and a lot of slides. The presentation is up on the MyState website and the ASX website, and I'm happy to take some questions at the end. So I might run through some of the slides a little bit quickly. It's not that I'm trying to hide from, it's just we don't have a lot of time. MyState Limited comes in essentially two parts. As a bank, which is the largest part of the organisation, and a wealth management division, which is essentially a trustee division based in Tasmania. It has a financial planning business, a trustee business, and a rather large mortgage fund business as well. From a bank perspective, most of our assets are held on the eastern seaboard of Australia. Our heritage is in Tasmania, so large part of our assets are there, but increasingly New South Wales, Queensland and Victoria as well. We've got a market cap of $400 million. We are on the ASX 300. And we have, through demutualisation provision some years ago, 64,000 shareholders, mostly in Tasmania, but also increasingly in the mainland of Australia as well. Just to give you a bit of an understanding of what we've delivered to shareholders over the last few years, slide on the graph on the bottom left-hand side there shows our total shareholder return versus the ASX 300 banks and the ASX 300 financials, and you can see there we are one of the best performing banks on the ASX over the last 5 years, despite the fact that many people won't have heard about us, and increasingly providing good or top quartile shareholder returns against the ASX Financials Index as well. Relatively stable in terms of dividends, and we have a dividend yield of around about 6 or 6.5%, which is fully franked and will be fully franked for some time to come. We have a lot of franking credits sitting on our balance sheet. Just in terms of our corporate history, three parts of our corporate history, two main parts of it. A number of credit unions in Tasmania merged over many years, and the final one of those mergers was 2007 when an organisation called Island State and Connect merged to form MyState Financial, which was a mutual credit union. In 2009, MyState Financial demutualised and merged with Tasmanian Perpetual Trustees, which was a listed trustee company in Tasmania as well, and formed MyState Limited. It was a non-operating holding company with two operating companies being MyState Financial and Tasmanian Perpetual Trustees. In 2011, merged with the Rock Building Society in Central Queensland, which was a listed smaller building society in Queensland. In 2014, MyState Financial got a banking licence and we became MyState Bank. In 2016, we merged the ADIs of MyState Bank and the Rock to become one, and on the 1st of December this year we sent the Rock brand to the archives, so we now have a single bank brand, a single bank licence, a single bank balance sheet, and two operating businesses and two operating brands being MyState and Tasmanian Perpetual Trustees. Our goal, we are a bank, we're a financial services institution, is to be simpler, more relevant and more accessible to customers and easier to use. We have built what is probably one of Australia's best kept secrets in terms of a fully online digital bank. I'll come and talk about that more in a moment. Our purpose to help people achieve their dreams, and importantly in today's environment, our mission for the last 10 years or thereabouts has been to make financial services simple and trustworthy, and we think we do a pretty good job of doing that. As I mentioned before, we've spent a lot of time, energy over the last 5 years building an online bank. We've taken a group of disparate systems and replaced most of those systems over a number of years so that we have a single core system, a single and modern customer relationship management system, an origination engine which not only allows us to originate through bank branches in real time, but enables us to originate customers online in real time. We can originate transaction accounts, savings accounts, term deposits and personal loans online in real time. It takes about 6 minutes from the start of a process to the end of a process to open a bank account. It does the AML checks, verifies your identity and can open the bank account. You can have that operating and used within about 6 minutes. We have a contact centre in Tasmania which has amongst the best customer performance metrics of a contact centre in Australia. And in February this year, we were amongst the first banks in Australia to go to launch with the new payments platform. We're fully compliant with the new payments platform. Most of the larger banks in Australia are not yet fully compliant with the new payments platform. We're also conscious of what our customers want to do. We have Apple Pay, Garmin Pay, Samsung Pay, Fitbit Pay, and Google Pay as well that our customers can use with their telephones and watches. We've revamped our banking product set over the last 2 years so that we've got a clean, simple online application process, a new transaction account which is monthly account keeping free because our customers just told us that that's what people wanted. We have a couple of savings accounts and online TDs. For personal loans, we can originate personal loans online in real time. As I said, we do have the ability where a personal loan comes in, the credit is good, the credit check is good. If a loan application comes in by 10 a.m. on the day, we can verify the loan, check the customer's identity, check the credit, produce electronic documentation, send it off to the customer can sign that electronically on their telephone, send it back to us and we can fund that loan by 4 o'clock the same day. We're one of the few people in the country that can do that. In early December, we'll also be able to do a similar thing with mortgages. The mortgage process will clearly take a longer time, but we'll be able to do that online with customers. Just in terms of our financial metrics, as I said, we're one of the smaller banks, listed banks in Australia. Our revenue last year up 1.5% to $126 million. Net profit after tax up just under 5% to $31.5 million. The directors increased the dividend slightly to 28.75 cents for the full year. Our capital ratio is as good as you get at just under 13.5%, and again that increased during the course of the year. We have a very good capital management capability within the organisation which allows us to grow our balance sheet. As you can see there, it grew by about 7% during the course of the year and still organically generate the capital that we need to do to grow. In the funds management business, we've got $1.1 billion worth of funds under management. Most of that sits within cash and mortgage funds and is a low risk, low cost business for us to run and is very complementary to the bank and the bank balance sheet as well. Our balance sheet, as I said, has grown quite substantially over the last number of years. Our total loan book sits at the end of June at $4.5 billion, and at the end of October is starting to run towards $4.75 billion. So it's growing in the back half of this calendar year in a similar form to what it did in the first half of this calendar year as well. 5 years ago, our loan book was about 2/3 based in Tasmania. Today it's less than half based in Tasmania. That's not because Tasmania has gone backwards. The Tasmanian economy is growing very well and our loan book in Tasmania has grown very well, but we've been focused on growing our business outside of Tasmania because this is a scale game and we need to grow our business outside of Tasmania. And so Queensland, New South Wales and Victoria are areas where we've been quite focused on growing our loan book. Our loan book is a very conservative loan book. You can see on the right-hand side, those two graphs show delinquencies. The bottom line is our delinquency line. The top two lines are the Standard & Poor's indices for major banks and all banks. As you can see there, our delinquencies are much lower than industry averages. Our $4.4 billion home loan book is made up of about 80% below 80% or below LVR owner-occupied mortgages, so we're very low concentration on investor mortgages, very low concentration on interest-only mortgages as well, and that's part of the reason why we have such a strong balance sheet and low delinquencies. Our wealth business had a very good year last year. Our funds under management grew strongly, and other parts of the wealth business also performed very well. Our wealth business has not been invested in like the bank business has been for a number of years, and our plan is over the course of the next couple of years to invest more money in that wealth business to bring it up to modern standards as well. It is very much rooted in Tasmania and stuck in Tasmania. It's a very manual business and needs to come into the 21st century. So what have we done over the last few years? Our balance sheet's grown by 50% in the last 4 years, so of all the listed banks, I think that's the strongest CAGR growth in the industry. We intend to continue to grow at above system, around about 2 times system, which will sort of have us growing at between sort of 8 and 10% balance sheet per annum. We need to do that so that we can also manage our liability book as well, to grow both sides of the balance sheet in concert. We'll continue to transform the business digitally. This time last year, our customer net promoter score was about +11 or +12. The work we've done over the last 12 months, we've got a customer net promoter score of +35. You compare that with the big banks, which are in some cases relatively similar number, but they've got a negative sign in the front of theirs versus ours is a positive sign in the front of it. The customers that we do have really do love us. It's not to say that we do everything right all of the time, but we run a very simple business. We intend to keep running a very simple and straightforward business and tell our customers what we're going to do and live up to those promises. Our products are simple, our products are transparent, and we intend to keep our products simple and transparent. We have a Moody's investment grade rating that was reaffirmed again only in the last few weeks, so Moody's are also looking at not only our deposits but also our securitisation tranches, and they're grading them very well, which is a testament to our risk management capabilities that we also have in the business. We're continuing to work on building a digital business. We've built a quite purposeful online bank at the moment, and we intend to continue to invest in building that out. From online banking products to online digital products as well. The open banking regime coming in from the middle of next year and the year after, our view is that we just need to continue to modernise that part of our business to enable us to provide our customers with what they're looking for. We have taken a large number of costs out of the business. The last lot of costs we took out of the business is when we merged the 2 bank brands. So we're only now managing and running a single bank branch. So we've got a very modern business, and our aim is to put customers at the centre of everything we do and ensure that we can run a consistently modern business that's growing in both the bank balance sheet and the wealth balance sheet. Just a couple of words on the industry dynamics. I'm assuming that most people here haven't been asleep for the last 12 months and have been reading the newspapers about the Royal Commission. Given the size and type of business that we are, we weren't even contacted by the Royal Commission to give evidence, so we've got pretty clear opportunity to keep growing our business as it currently is. The interesting thing for us was the Productivity Commission review that came out in the middle of the year that sort of indicated that the competitive landscape is still very unbalanced, and even on the front page of today's Financial Review you still see more stories about the unbalanced competitive landscape. So we will continue to talk to regulators and the government about the unfair advantages that large banks get over smaller banks in terms of funding cost differentials. Larger banks get an implicit government guarantee, which gives them about a 40 basis point advantage over us in terms of funding costs. They get to negotiate with APRA around their risk weights and in banks Everything's about funding and capital, and so they have a substantial capital advantage over us. It has been reduced and will be reduced in the near term with some of the things that APRA have announced. We continue to ask them to reduce the differential between the large banks and the smaller banks. A lot of the macro-prudential regulations, the investor loan caps, the interest-only caps that APRA have applied over the last couple of years, have advantaged the larger banks over the smaller banks. And again, we ask them to change those things. And we start to see now some non-ADIs benefiting from macro-prudential intervention. So that's just a little bit of our views on what's going on in the market. We have funding costs that are still elevated, as I mentioned before. Housing market continues to be a very competitive market, and we continue to manage and watch our costs to ensure that our business is competitive for the future. So that's a little bit about MyState, what we've done, where we've come from, and some views on the sector. And I guess now I'm happy to take any questions.